Did you know that American billionaire and investor Charlie Munger sees Tesla as a top-ranking EV company? The stock investor said in a previous statement that Tesla has made significant contributions to civilization, and as such is well-positioned to acquire more market share and continue to dominate the EV industry. Tesla has had several incredible comments from the big names in the world of investing, and so this could be one of the more bullish comments that will put the right attention to the car company. Hey guys, welcome back to Tesla Tomorrow. Almost all tech and growth stocks are recently bouncing much higher after the consumer price index showed signs of easing inflation. Tesla stock almost exactly matched the Nasdaq's wild 7.3% advance in that session, although it has been unable to capitalize on this boost since Musk's saga with Twitter keeps distracting the stock from its growth story and performance. There are also several other factors which are not directly related to Tesla's performance but have continued to drop the stock price. Tesla has done several amazing works in the EV industry and is growing at a pace that many of its competitors find hard to keep up with. In a recent interview with CNBC, billionaire investor Charlie Munger disclosed his bullishness on Tesla as a company and how he thinks the company is performing higher than expected. What does Charlie Munger have to say about Tesla? Let's find out. But before we do, if you like this type of content, don't forget to like and subscribe and turn that notification bell on to keep up to date with everything going on with Tesla. Berkshire Hathaway Vice Chairman Charlie Munger recently spoke highly of Musk's electric vehicle company Tesla, calling it an amazing feat in American auto industry. Munger also stated that he is surprised that Tesla has performed so well, further reiterating the automaker's strong stance on the EV business. Tesla became one of the most valuable companies in the world with a market cap of over $600 billion. As of January last year, Tesla has produced a total of 1.91 million vehicles since 2009. The automaker manufactured 386,759 vehicles in the first 2 quarters of 2021 alone, and delivered almost the same amount at 343,000 vehicles in the third quarter of 2022. The automaker's revenue for the same quarter ending in September was $21.454 billion, a 55.95% increase year over year. Tesla's revenue for that period was close to $75 billion, a 59.8% increase year over year. According to Charlie, Tesla has made real contributions to civilization, and Elon Musk, its CEO, has done some good things that others couldn't do. He had further cited that there hasn't been a successful new auto company in a long time, describing what Tesla has done in the car business as a minor miracle. Charlie has had great investing track records in the past. At the Daily Journal's annual meeting earlier this year, the investment expert had predicted that considerable trouble was coming for investment markets. He stated that while people were enjoying wretched excesses, it spelled danger for the economy. Speaking further on this, he cited the great short squeeze in GME, the Bitcoin market at the time, as well as venture capital throwing too much money as major factors leading to these excesses. He also explained that there is an excess in venture capital and other forms of private equity. As well, he added that if the government prints too much money, it will eventually cause more trouble than any that has been seen in the past. And that is no doubt what is happening today, with inflation at an alarming rate globally. As prices continue to increase across a broad range of spending categories, most people find that they spend more on buying commodities than they used to. According to the 12-month percentage change in the Consumer Price Index, as of October this year, prices in the United States had increased by 7.7% compared to October 2021. With inflation on the high side, FED had also recently raised its benchmark interest rate by 0.75 percentage points, which was the third outsized rate increase in a row, bringing the FED rate to 3% to 3.25%. In a recent note by Morgan Stanley about Tesla, the investment company stated that while Musk's ownership of Twitter could affect some consumers' sentiment regarding Tesla, any resulting weakness in Tesla shares could create an opportunity for investors. Tesla stock is currently valued below $200 and appears to be increasingly burdened by the several sentiments and controversies surrounding the Twitter deal, amongst several other factors. According to Morgan Stanley, controversy creates uncertainty, and one of the main drivers of Tesla's shares to a high valuation status was the ability for investors to confidently model the economic outlook of the company's core EV and energy business when it comes to storage, which was supported by a favorable economic backdrop. It added that this confidence has been tested in recent times and will continue to be tested through year-end. Also, while it's not possible to quantify any potential impact this may have on Tesla's shares, there is a regular topic for concern among Tesla investors. Tesla has incredible fundamentals in terms of car production, deliveries, earnings and revenue, profit margins, and technology, to mention a few. However, despite these factors, the automaker's stock still falls below $200, and it is uncertain when it would return to record highs again. In the note, Morgan Stanley cited that these sentiments can affect Tesla, first in terms of consumer demand, as there will be some customers who may not wish to be associated with controversy. Likewise, Tesla's commercial partnerships may also be affected. While Tesla is a highly vertically integrated company, it remains resilient and reliant on a host of commercial partnerships that may also not want to be associated with certain levels of controversy. The automaker's government relationships could also be affected too, as well as investors' sentiment and capital market participation. Tesla's industrialization of renewable ecosystems and onshore battery development requires close cooperation with sovereign entities, especially in the US and China. Also, while the car company is largely self-funding at the moment, it will require a continued strong relationship with the investment community to achieve the growth implied in its current $600 billion market capitalization. The investment company further cited a $150 bear case for Tesla's stock price before the end of the year. It said, "We see a window of opportunity opening for prospective Tesla investors. Potential Tesla sentiment, concerns, and decelerating EV demand, particularly in China, could see Tesla test our $150 bear case before year end." Morgan Stanley also believes that Tesla may continue to cut car prices in the future. It stated that its China team has commented on the recent significant price cuts in that market, and in response to this, it is expecting price cuts following in Europe, as well as Tesla's Giga Berlin factory, which begins to surpass the 5,000 units per week mark. Tesla will make use of any opportunity to lower car costs in the future by reducing production costs as well, but this will only work if the car company has a strong hold on its supply so that it can meet up with the increased demands resulting from the lower prices with its EVs. Morgan Stanley added that in its $150 bear case scenario, Tesla shares would trade at approximately 12.5 times EV per earnings before interest, taxes, depreciation, and amortization, and 23 times PE on its 2025 forecast, which seems to be an excellent value for a self-funded top-line grower like Tesla that is in a top position to benefit from re-architecting the US renewable supply chain at scale. Tesla is taking a large percentage of the massively expanding EV industry, and this is not only in terms of market shares but also profitability. Tesla has previously confirmed that its cars cost about $36,000 to make on average in parts and assembly, while it only sells it for about $10,000 more. This profit margin makes Tesla the world's most successful automaker in that respect. Tesla is also experiencing increased demands and is working out ways to conveniently sort through these demands too. The automaker recently cut the delivery waiting time on all Model 3 and Model Y vehicles to a minimum of a week. Prolonged waiting times have been a major issue for people who want to buy Tesla cars, but with that wait time reduced, demands for the company's EV make scale higher. In a recent news as well, Tesla made 8 times the profit margin per car sold compared to Japanese manufacturer Toyota. Tesla reported a 2022 Q3 net profit of $3.29 billion, while Toyota stated that it made a net profit of $3.15 billion for the same period, despite the Japanese brand delivering 8 times more vehicles than Tesla in that period. It is evident, therefore, that Tesla is not only dominating the EV industry, but it is also gradually becoming the largest automotive company in the world. Although the automaker has not been performing too well in terms of its stock valuation owing to pressure from the market, there is still opportunity for significant growth. Do you share this opinion though? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.